financial management and recovery. In good times, we aspire to run our business from a healthy mixture of customer cash flow and our own accumulated savings. When disaster strikes, however, you may be forced to rely on other sources of money while you recover. In an emergency, maybe you can't rely on your customers for a while, and your own reserves run low. Maybe your property, or real estate, or equipment got wrecked in the disaster, so it's not going to be business as usual, at least for a while. You want to get back up on your feet, back to customer sales, but you need a lifeline, a financial lifeline. A financial lifeline will mostly depend on three sources: your existing insurance policies, the government, and your bank. We'll talk about those three lifelines one at a time, but also, for emergency-proofing your business, you should understand that all three lifelines, your insurance company, your government, and your bank, want similar things in place ahead of time. They want good records kept and available soon after the disaster of your property and assets, copies of your tax returns, copies of updated bank statements, and copies of accounting records. If you're up to date on all of these and can produce those documents and records after the emergency, you will get help that much faster from these three lifelines. Now, let's talk about each of these lifelines in turn, starting with the role of insurance. Your financial strength in recovering from an emergency or natural disaster may depend first and foremost on your insurance coverages. Maybe the following statement is obvious, but it's worth saying. Insurance only works if it's in place before the disaster. Your government or bank might help you after the disaster, but your insurance company will only help you if you're already a paying customer. Studies of recovery after natural disasters, like the flooding of Hurricane Katrina in New Orleans and Hurricane Harvey in the Texas coastal region, shows that households in the floodplains actually recovered financially much faster than those outside of the floodplains. That's surprising. They were also the hardest hit. So how did they recover faster? Well, the difference is that if they were located in a floodplain, they almost always had flood insurance. But those outside of the designated floodplains often didn't have that same insurance protecting against floods. The big lesson for your business: having the right insurance in place ahead of the emergency or natural disaster may be your biggest chance for making a strong financial recovery. In a related video, we talk more about the kinds of insurance your business could need and how to approach buying insurance the smartest way. So check out that video as well. Your next big lifeline in a disaster may be the government. If your state or the country declares a state of emergency, a few helpful things may happen. To set your expectations, you might like to know the following. In past large-scale emergencies, for example, the Small Business Administration, SBA, has moved quickly to provide loans to businesses, as well as households. As a general rule, the SBA does not make any grants. They make loans. Sometimes, households are given small grants after a natural disaster, usually by the Federal Emergency Management Association, or FEMA, but that is not typically available for businesses. Also, you should assume that any grants, basically free money, will be quite small. Assistance to your business will come in the form of business loans offered by the SBA. If there are loans offered, they may be offered on attractive terms, such as lower than typical interest rates, and they may be offered with an easier than typical due diligence process. In the event of a declared disaster or state of emergency, the authorities are really trying to make loans available to you and your business quickly. In recent years, following disasters, the SBA has offered up to $2 million for 30 years at 4% interest to help businesses with both physical damage and economic damage. The SBA also makes loans, again, with lower interest rates and longer terms, to households up to $200,000 for losses to individuals' homes. So the question then is, how do you set yourself up to quickly get assistance like this? The answer is what we've already been talking about. Often, to qualify for SBA or other government assistance, you'll need fast and complete access to your business's books and records. You'll need to be able to prove physical damage, as well as economic damage to your business. You'll also need proof of insurance in place, that partly to show what has already reimbursed. The SBA doesn't want to make loans to businesses that have already been covered financially, and it's partly to show the future loans are secured by insurance policies. All of this requires carefully kept accounting records. You also want to be able to prove financial resilience. Lenders, even the SBA when it's trying to make loans quickly, will have to see proof that you can pay off the loan over time. In advance of the emergency, you can take these reasonable steps to help get you access to a government assistance loan, such as: do you have electronic records of your business finances, like your tax returns and accounting software, backed up in the cloud? Do you have passwords and logins to your business bank accounts accessible? Do you know the name and contact information of your insurance providers? They themselves may be overwhelmed by other customers in the event of a large disaster, but eventually they will respond to your claims. As part of your disaster preparation, you'll want to keep a record, probably physically stored, but also in the cloud, of your insurance agent's contact information. Do you have an electronic record, again, stored in the cloud, safe from damage, of the value of your business assets? Think furniture, fixtures, and equipment. To the extent you electronically track inventory in your business, inventory that could be damaged by a disaster, you have an additional tool for accurately claiming property and economic losses in the event of an emergency. Between purchase receipts and tax records showing depreciation, you should have enough information to make claims to your insurance company. You will also have what you need to apply for a government-subsidized SBA loan. Finally, while you might not be able to save your business's cash from emergencies like flooding, looting, fire, earthquake, or tornado, it doesn't matter too much if most of your business's money is held in a bank account. A bank's electronic record of your checking and savings account really can't be destroyed by a natural disaster. You should understand there's a timing element to your ability to apply for an SBA loan. Property loans, for example, should be applied for within 60 days after a disaster. Economic damage loans should be applied for within 9 months after a disaster. You can see why getting access to all your old records quickly is very essential. One more thing about state or federal declared emergencies. Usually, in that case, your business will be eligible for special tax filing extensions and penalty waivers from the IRS or state tax authority. Business losses due to emergencies could be tax advantaged. You'll want to consult with a tax preparer to take advantage of credits, fee waivers, and time extensions available in the year following a declared disaster or emergency. Perhaps it goes without saying that getting a new SBA loan after a disaster is only possible if you are up to date on reporting and paying your taxes, up to date on paying previous SBA loans your business might have, and up to date on keeping insurance policies in place that support any other SBA loans. If you're not compliant already, the SBA will not give further loan assistance in an emergency. Finally, let's talk about the role of an unused line of credit from your bank or lender and how that can play as a lifeline in the event of an emergency. In combination with proper insurance and government assistance, a great disaster preparedness tool is an unused line of credit. A loan from a bank is one thing. A potentially even more powerful financial tool is an unused line of credit. This isn't something you can get when you first start your business. It may take years to qualify for this, but it is something to aspire to. The way it works is this. A bank agrees to lend you up to a certain amount of money, but you initially do not draw on that money. Like a credit card, although typically with much lower interest rates, you can borrow, pay back, then borrow again on a business line of credit. Because you can borrow, pay back, and borrow again, these are sometimes called a revolving line of credit or a business revolver line. This financial tool is a great example of something that is perfectly suited to help you recover in an emergency, but simultaneously strengthens your business even in good times. Lose a warehouse or work truck to a fallen tree? In addition to insurance, the revolving line of credit can help you respond as quickly as your business needs it. But even without a natural disaster, the revolving line of credit can give you flexible financing to use opportunistically. 3 thoughts on lines of credit are worth emphasizing. First, a very young company cannot generally get one of these, as banks like to see an operating history and tax history of at least a few years before considering you for a line of credit. Second, the line of credit is most useful if it goes unused most of the time. Save it, literally, for an emergency. Part of the value of the line is in the fact that you don't pay any interest when you don't draw on it. It is meant to be there only when the unexpected happens, like a natural disaster or a can't-miss business opportunity. Finally, as we said before, insurance and government assistance may be keys to getting your business financially back on its feet. But there's an important timing element to both of those, meaning they both take time. Sometimes, especially with a lot of other businesses needing assistance after a disaster, it may feel like too much time. In a large-scale disaster, your insurance company and your government will be processing many claims and applications at the same time as yours. Even in a small disaster that only affects your business, their timeline can feel like forever. This makes an available, unused business line of credit your essential lifeline. It can bridge the time between now, when your business needs to operate, and the medium term, when maybe insurance and government assistance can respond. As soon as your business is eligible, you should request a revolving line of credit to safeguard against disaster and as a supplementary protection alongside sufficient insurance. These three lifelines, your insurance company, government, and your bank line of credit, are your best bet for keeping your business afloat until you can reliably reach and sell to customers again.